Now we will learn different type of stock compensation plans. Another form of stock compensation plan is called restricted stock plan. In a restricted stock plan, the company transfers or gives stocks or units to employees, but there is a condition that the employee cannot sell or transfer the stock for a certain number of years or service period, and after the service period and when the vesting period is over, the employee can sell the stock or transfer the stock. And there are two types of restricted stock plans. One is the restricted stock awards, another is the restricted stock units. So please remember the key difference between the restricted stock plans and stock options is that stock options is an option or a right to purchase the stock. On the other hand, these stock plans are pure regular stocks that employees are receiving with the condition that they cannot sell it for a certain number of years. Now here we follow the same criteria just like the stock options. For the accounting purposes, we will calculate the compensation expense based on the fair value of the stocks that are transferred to the employees on the date of when it is granted. And then when we determine the compensation expense, we will record it over the period when the employee serves the company or during the serving period. And then we do not make any adjustments if there is any stock price change in the market. So now we will see one example. First, let's focus on stock award. So stock awards means you are giving the actual shares to your employees. Here is the example, January 1st, 2025. Here Sparks issues 1,000 shares and they are giving it to the CEO Lisa Leslie, and Sparks stock has a fair value $20 per share. The service period is 5 years and vesting occurs if Leslie stays with the company for 5 years. If Leslie leaves the company before 5 years, the stocks will be forfeited. The par value of the stock is $1. So the CEO, Lisa Leslie, is receiving 1,000 shares, $20 for the fair value, $1 is the par value, but the condition is that they cannot sell or transfer those shares for 5 years. Now, how we will record it? On the grant date, the company is actually issuing stocks and giving it or transferring it to the CEO, Lisa Leslie. So we will record the stock issuance, 1,000 shares, $1 par value, and the stock hours was for each share was for $20. So $19 will be paid in capital in excess or additional paid in capital. Now, at this point, this is just the grant date. We cannot record it as a compensation expense. Rather, we will debit unearned compensation, which means it's a deferred compensation on the grant date. And then we will reduce this unearned compensation over the service periods and we will record compensation expense. Now, here we will see what will happen at the end of first year, which is December 31st. We are allocating here 1/5 or $4,000. We are recording it as a compensation expense, which is debit, and then we are reducing that unearned compensation. Now, what if Leslie leaves the company before the 5-year service period ends? In this situation, we need to forfeit all the stocks. So we will see the example of the forfeiture of the restricted stock awards. So assume that here the service period is same 5 years, and here $1 per share, and when the stock awards were granted it was $20 per share. We see the example. Now here, if Leslie leaves the company, what we need to do? When we granted those stock awards, we recorded the stock issuance. That means we credited common stock, we credited paid in capital in excess. So we will eliminate those. So we will debit those accounts, and we assume that here 2 years passed when Leslie left the company at the end of 2026. That means for those 2 years we recorded compensation expense for 2025 and 2026. So we debited compensation expense. Now we will eliminate that. That means we will credit compensation expense. Now remember, here on the grant day, when we issued the shares, we debited the entire 20,000 as unearned compensation. Now when 2 years passed and we recognized or recorded 2 years compensation expense, we reduced unearned compensation by 8,000, but we still have $12,000 unearned compensation debit balance at the end of the second year. So when we record the forfeiture, we have to eliminate that unearned compensation debit balance. That is why we are crediting unearned compensation. So we just saw the example of restricted stock awards where employee actually receives the stocks and stocks are issued on the grant date, and then we allocate those stock price over the service year as compensation expense. And you also saw what if the employee leaves before the service year ends and how we record the forfeiture of the stock awards. Now we will see the same example, but this time this is not awards, this is rather restricted stock units. So there is a slight difference between the stock awards and stock units. For stock units, it is pretty much like the stock options. We are giving, of course, the stocks, but we are not issuing the stocks on the grant date. Rather, we will show it as our equity, but we actually label it as stock units. So we'll see the same example, 1,000 shares, $20. Here the fair value per share, $1 per value, and the service period is 5 years. So how we will record this time? This is restricted stock units. So here on the grant date, just like the stock options, we do not do any journal entry. So do not record any journal entry on grant day, because on grant day actual shares are not transferred. Of course, this is a stock options, stock compensations, not options, but we are not transferring or issuing the shares on the grant date. So we do not record the journal entry of the share issuance on the grant date. Rather, each year we allocate the total share values as the compensation expense, and instead of showing it as capital stock or additional paid in capital, we show it in our equity capital, but we call it restricted stock unit. So 1 year passed, we will record 1 year compensation expense, which is $4,000, and we will also credit it as paid in capital restricted stock units. Now, what will happen? Leslie leaves the company after 2 years. So here, remember, we didn't record any stock issuance or unearned compensation. Rather, we are just allocating the share values as compensation expense over the period, and we have been showing it as paid in capital restricted stock units. So after 2 years, if Leslie leaves the company, we also have to record the forfeitures of the stock units. So far what we did for 2 years, we debited compensation expense for $1,000 each year. So we have to eliminate that. So we will credit compensation expense, and we also credited paid in capital as RSU or restricted stock units. So we will eliminate that. That means we will debit that. This is how we record the forfeiture of the restricted stock units.